Hello everybody and welcome to another amazing video of DIY investing. We have been watching for a breakout in Bitcoin for a long period of time. We have been downtrending for over 80 days and over the last couple weeks we finally ended up seeing that breakout. This is coming at a point where the dollar is sitting at major resistance, looking like a multi-year cycle top, and the stock market is now fastly approaching support. During this time is where we're about to see the big reversal taking place not only in Bitcoin but the rest of the markets as well. So for today's video I'm going to be breaking down exactly what I'm watching for, how to go about playing this next move, and what to watch for when it comes time to see that reversal take place. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, here we are to start off today's video. Now in my last update we were talking about this breakout that we just saw, and we were wondering whether or not we were going to get continuation up or whether we would end up seeing one more final correction back down, kind of as a retest of this descending resistance. Now in the early morning, as we've seen the market open, we have seen a significant rejection from Bitcoin, and this is coming after we actually ended up retesting this high at about $28,200. We ended up running all the way back up to that resistance, tagging it, and then rejecting. We've still seen the breakout that we wanted. We've still gotten outside of this descending resistance. So even if we make one more low here, it doesn't necessarily change anything. All we're going to have to go through is a little bit more of consolidation, a little bit of a lengthier consolidation before we're at that same point of reversal. And so we're going to be watching for a potential retest of this descending resistance. And then from there, that's going to be where we're going to draw our line in the sand. If we end up coming all the way back down, breaking below this descending resistance, and even coming back down to 25K, in my opinion, this entire move will be deviation, and we'll probably be looking for one more final flush sub 25K before that is over. But as it stands, the most bullish case scenario has played out, basically indicating us breaking out of that descending resistance. So even if we get that lower low, just remember that we're still outside of descending resistance. As long as we're holding above and outside of this level, in my opinion, we're going to continue to see upside potential. And a lot of the downside that we're seeing right now has everything to do with the stock market. The S&P 500 is still just selling off, and we haven't quite reached our support zone. We're getting really close to that point. I do believe that we are going to be tagging that very soon. And this has kind of been the area of demand that I've been seeing fit ever since we were unable to hold the breakout up here at about 4,300. And so as it stands, we have one more little low, it's looking. From there, we'll be able to determine whether or not we're going to get the reversal that we're watching for. But if we're watching this from an Elliott wave perspective, in my opinion, this is just looking like your classic ABC correction. And this wave C is coming right back down onto trending support, horizontal support of our entire, range that was taking us all the way back into the bear market. And this is kind of where we were tagging. If we're watching Bitcoin, we've been watching this 25K level as our area of demand. And we knew that once we got above that, most likely it was clear skies ahead for continuation. And we can see that we spent a significant period of time rejecting below that level until finally, in this most recent move in about March, we ended up seeing a breakout. And then we've been retesting this as support for, 200 days approximately. When we're looking at the stock market, in my opinion, it all is very relative. We can see that we had, this resistance here. We've had a number of different reactions on this level. And so for us to be breaking out and coming back onto support, in my opinion, it will end up holding a support. And even though a lot of people, depending on who you're talking to and who you're watching for analysis, a lot of people are going to be drawing this as a big ABC before we come and make this giant double top type formation and come all the way back down to basically COVID lows. And depending on who you're talking to, some of those people even think that this thing's just going to go straight down to the pre-2008 levels. So I don't think that that's the case. I still firmly believe that we're going to see continuation inside of this cycle. Even though we're seeing this pullback, you got to keep in mind, guys, that we spent a number of months below this resistance level. We broke out, and then for us to be coming back down, that's looking like it's going to be a support and resistance flip. But this is going to be coming as support. So we're going to be watching for that moving forward from here. Overall, what we need to see inside of an ABC correction, there's always 5 impulse waves in wave C. And in my opinion, we've already seen wave 1. We've already seen wave 3, and we're currently working on wave 5 right now. I do believe that we're most likely going to end up seeing one more final impulse to the way down just to get back within this green box, which is basically 4,200. That's what I'm going to continue to stick to. Overall, nothing has changed in the bigger pictures. We're just seeing a little bit more downside price action, which in my opinion is the reason why Bitcoin is actually rejecting right here. So, you know, even if the stock market kind of makes this lower low, we see it's probably not going to be too big of a dip, maybe 1% or so. About 1 to 2% more before that's over. A 1 to 2% drop in the stock market could very easily take Bitcoin to one more low to about 26.2 to 26.5, just somewhere to retest this descending resistance before we start that next leg up. Because big picture, I still firmly believe that this is going to end up holding as support. I still believe that what we're looking at here is just kind of a sideways consolidation in this range that we've been in, above 25K, below 32K. And I think that once this breaks out, this will kind of take us into that final blow off top to end the first impulse. And it will be very similar to kind of what we saw here. And you know, guys, one of the things I want you guys to remember here is the quickness that this first 2019 trend had. This was a very quick impulse, and so far we're already far surpassed the time frame that it was in here. And so just keep in mind that the way that the correction is going to look, because we had like 400 to 500 days worth of a correction before we ever got to the point of breaking out and making a new high above 14K. You know, it was talking almost exactly 500 days from the high of 14K's impulse to the point of us actually making a new high above $14,000. And so when we're looking at this cycle, I want you guys to realize that because of the added time that it's taken us worth of consolidation just in this beginning uptrend, it's much quicker than what we saw here. If we draw a date tool from the bottom of the cycle low to the top of that first impulse, it was only 200 days. We've already spent 200 days just inside of this sideways price action on top of 25K. So when we're looking at this, we have to keep in mind that this is two completely different cycles. And although I have been comparing them and showing why I believe that they are super similar, we're currently sitting at 329 days from our cycle low, so we've already far surpassed that first impulse. And I do believe that we're most likely going to continue to get one more final high before this is over. Now, the reason I'm talking to you guys about this is simply just because of the fact we saw 500 days worth of sideways price action before we made a new high. Let's assume that this market, you know, breaks out. We go to this lower high here at about 48 to 50,000. And then we start another correction. In my opinion, that correction would probably be a really quick one. It could rival in percent loss, although I'm not necessarily anticipating us to have a 72% correction, because that's how big this correction was. I don't think that that's going to be the case, but a 40% correction is very consistent with prior bull markets, and that's kind of what I would be watching for. So to see a 45, even a 40% correction would be taking us to about 28. Most likely, we would be coming back down to retest that 25K level again. That, to me, is where, if we finish out this impulse going upwards of $48,000 and $50,000, I do think that we'll see a reversion pretty close back down to that 25K level again. Although I do believe that we will hold that, and we won't go any lower than that point. And it is possible that we don't even end up going that low. Like I said, this 28K level is going to be taking us pretty flush with the support level that we saw in our bull market, at the beginning of our bear market, right before Terra Luna collapsed. That was kind of the point where we broke down from that level. And I do think that during this correction that we're going to see once this first impulse is actually over, I think that that's going to be our area of demand. Anywhere from about 29K to about 25K. Although I wouldn't be surprised if we ended up holding support above this 28 to 29K level. Overall, that would give us, you know, anywhere from a 40% correction down almost to a 50%, which in my opinion would be pretty consistent. You know, the reason why we saw a 72% correction in the last cycle was actually because we had enhanced selling due to the pandemic, right? I don't believe that this sell-off would have been nearly as volatile had there not been, you know, such a big black swan event that was taking place. But I do think that we still would have saw probably a 50 to a 60% correction, because I mean, just back down to the support that, you know, we first started bouncing off of before the pandemic, that was already a 52% correction. So this correction was looking like it was going to follow through regardless, and then the pandemic obviously enhanced that entire sell-off. So a 60% correction, in my opinion, would have been a little bit more similar, but you know, either way, it only dipped another 11 to 12%. It wasn't that far off from where we probably would have ended up regardless of the pandemic. The thing about news is it always pretty much just, the charts will show us something, and then the news will come out and give us that move that we were already watching for. Oftentimes, the market is going to be telling us what's about to happen, and then the news comes out, makes this big announcement, and then we actually see the resolution to whatever the analysis was showing. And so inside of this most recent move, you know, we'd be looking at almost the exact same size of an impulse, basically taking us to the top of the 618 Fibonacci. And so inside of this most recent one, if we're to see a move all the way back up to 50K, we're literally going to be looking at the exact same thing. You know, a 618 retest giving us $48,500, and then for us to see, you know, a 40 to a 50% correction on the way down, that would be pretty standard, especially in comparison to the last time that we saw that type of an impulse. So this is kind of what I'm personally watching for. Nothing has changed that much. The only real difference is on the shorter time frames, Bitcoin is getting rejected, and depending on how this rejection plays out, on a 4-hour, it's looking pretty, you know, gnarly. But, you know, a lot can happen. As we're at the points of us breaking out, it can go really any two ways. For me, what I'm most focused on is the stock market, because if the stock market starts reversing, I firmly believe that Bitcoin will as well. And what we're already seeing is Bitcoin reversing. Bitcoin's already flipped its descending resistance. We've already retested it. And so we should expect to see some volatility. Whether we hold the breakout or whether we go to one more low, it doesn't really change anything, because for me, the fact that we're outside of this descending resistance is the confirmation that we're going to be breaking bullish. So until we close all the way back below and get deviation, I'm sticking to that plan. The stock market is nearing our first support that we were really watching for. Our first support was 4,300. When that failed over here, we then drew a secondary target of about 42, and we're very, very close to that level. Now, one of the big things I'm personally watching for when we're looking at the dollar and reversals across the board is the DXY. Now, when I'm watching the DXY, I'm looking at this entire move and this entire impulse that we've been in as a wave B, and this is what's going to be taking us to a lower low in wave C. I know that there's a significant amount of people that are looking at the bonds, they're looking at the treasuries, and they're looking at the strength of the dollar that it's been in for the last decade. You know, if we come all the way back down to the 2008 financial crisis, the dollar's been uptrending ever since that point. And I do see a lot of people that are expecting that the dollar's just going to keep going up like this. And I don't believe that that's the case. And I've, you know, drawn extensively as to why I don't believe that that is so. Because we can come out here and we can see almost the exact same sort of cycle every time. We get these impulses, we fall to new lows, start this correction, lower highs, fall to new lows, lower highs, fall to new lows, and I do believe we're going to continue on in this trend. Now, what's telling me that we're going to see more downside is the fact that we've already finished all of our impulse waves. We've seen a very consistent 5 waves up, and in my opinion, all we're doing right now is making our first lower high before we make a correction at least to 94, but I wouldn't be surprised if we came all the way back down to support of this wave 4, which is going to be about 89. Now, I'm going to continue to stick to that analysis, and I don't believe that what we're seeing right now in the dollar is necessarily an impulse. I believe that this is a corrective wave, and this is wave B before we see a lower low taking us to 94, which is basically just going to be this support level down in here. That's kind of where I'm personally watching for the dollar to end up reversing to, and I still think that this entire move to the upside is corrective. This is what's to be expected at the beginning of a new trend. You never have things just kind of go straight down. I mean, sometimes in crypto it happens that way, but even Bitcoin, if we look at the last, you know, couple cycles worth of our cycle tops, this cycle top didn't just go immediately straight down. We had consolidation, we had lower lows and lower highs. If we come back in 2017, it was kind of the same thing. We had this big lower high, and then we went lower. And in my opinion, what we're looking at inside of the DXY is more consistent with what we saw at that 2017 cycle top for Bitcoin. To me, it just looks a lot like the same sort of market structure, and in my opinion, this is more or less all that we're seeing. It's a little bit different, obviously, because there's 2 different cycles that we're comparing, but you guys are getting the picture of what I'm trying to draw here. This is just the first lower high This is the top of wave B before we finally get that lower low and continuation in this bearish trend. Because keep in mind, this is actually the first example of us reversing the trend, because we've been at an impulse since 2008. And I do believe that this was our wave 5. And so even though there's people that are expecting this to go into another new all-time high, I firmly believe that this is a corrective wave and it's going to get smashed. When we're seeing the stock market approaching support after a major breakout level, this is basically the same as watching 25K for Bitcoin. Bitcoin has already broken out of its downtrend, which is, in my opinion, leading the market. Even in the shorter time frames, even though it's getting pretty volatile, this is still just a doji. It is a rejection from this level up here. But inside of a breakout, you're going to have some of these candles come in. And it's not always going to be perfect. We always have periods of indecision. For example, this is a doji if we go to a daily time frame. If we remove our drawing tools and look at that, that's basically a rejection candle in and of itself. Less than a doji, it's actually more of a bearish pin hammer candle. And so for us to be looking at all of these markets, if we end up closing kind of central here and fairly neutral to this move, it really could go either way, and I'm not really going to try and draw it too much inside of the shorter time frames, because the big thing I want you guys to just continuously pay attention for is the fact that we're outside of descending resistance. The dollar, the stock market is sitting near our support where we're watching for a reversal. The DXY is just kind of impulsing into no man's land. In my opinion, the perfect type of corrective B wave before we see that lower low. So when we're looking at all of these sort of things in unison, in my opinion, it's giving us a pretty decent idea of what to expect moving forward. Bitcoin was kind of the indecisive thing where we didn't know if we were going to break out. It was looking a little weak down in this period, but the fact that it even broke out and is breaking out first, that tells me that most likely the stock market's going to be holding support and that the dollar is getting very close to a topping point. So anyways, guys, this is the video I had for you. If you found value, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to join the Discord server, or if you guys want to actually see how I'm investing my money going over this entire cycle, links are in the description to go ahead and sign up on my website. I appreciate you guys. I love you guys. And I wanted to give you guys some basic analysis in a way that's easy to understand, as well as simplifying my thoughts as to why I believe that we are nearing a reversal. Thank you guys so much for tuning in. And with that being said, I'll catch you in the next one. As always, peace out.